Hello and welcome to another edition of Stockwatch. So we've seen in the recent week that a few corporations such as JPMorgan Chase, Amazon, Microsoft and Citigroup have all paused their political donations to the Republican and Democratic parties in the wake of the Capitol Hill riots. Many corporations have taken actions against instigators of the pro-Trump movement that violently stormed the US Capitol. So while some companies are temporarily pulling the plug on all political contributions, others, including Amazon, will specifically cut off donations to Republican politicians who opposed Biden's certification as president. So quite a big move from Amazon that they will completely cut off the donation funding for those particular Republicans. Citigroup and JPMorgan Chase, most interestingly, were the first companies to announce that they would pause all contributions. And JPMorgan Chase recently said that it would pause all political action committee contributions for the next 6 months. A spokesperson for the company said the focus on business leaders and leaders in general, such as civil leaders and political leaders, should now be governing and getting help for those who desperately need it the most right now. So political action committee contributions were raised by Citi, and that was almost $800,000 in the 2019-2020 campaign cycle. So a very big cut-off blow, perhaps for the next 4 years as well, when the next campaign comes into fruition. And interestingly enough, both JP Morgan and Citigroup's PACs gave bigger contributions to the Republican federal campaign last time around than the Democrats. So we'll have to see how that's going to play out for the next term as well. Is there going to be any bias towards the Democratic campaign going forward? So let's just take a quick look at JP Morgan Chase. First of all, so we saw this great accentuation with the stock on the basis that the banking stocks in general were favoring further stimulus hopes of a post-pandemic economic recovery. And obviously, as you can see here, it's actually pushing higher and higher. We've got quite a nice build on the prices. Prices have waned recently. The earnings season has come out, and JP Morgan Chase have actually posted a higher, stronger than expected fourth quarter in 2020, but it didn't really help prices as that sank slightly. But with the Martin Luther King bank holiday yesterday, stocks didn't really have a time to digest the information too much from Friday's announcement. So we're just waiting to see what the outcome will be when the markets open. What I'm looking at particularly is looking at if there's any strong bearish divergences on the momentum indicator to start bringing prices even lower. For the meantime, though, this is supposed to be such a temporary slip in the market, so we're just going to see what's going to happen with that in the next few trading sessions if prices can bounce back. What I'll be looking at particularly at the moment is if prices can beat these gaps here. If they can bounce off the support lines, then we should see further momentum for the upside as well if prices do start to wane. So let's just take a quick look at Citigroup as well. They're in a particularly similar contrast because, as I said earlier, the banking sector in general was boosted for most of the second half of 2020. The stocks rallied on stimulus hopes and expectations of the pandemic recovery, but the Citigroup earnings were a little bit mixed, so that's why we see quite a big fall in the candle on Friday. But what I'm looking at again, a little bit like JP Morgan Chase, is if we can veer away from the recent gaps in the market. We're expecting a little bit of a come down here, but if it can bounce off this line here roughly at the lower end of the $60 range, then we could see potential for more upside. Again, we're not seeing too much of a bearish divergence on the indicator. You could say that this is a slight one, seen as though that there is such a big momentum going to the upside here. There's a slight downtrend here. However, this recent spike, as you can see, could propel prices higher. There's not much of a divergence here, more of a convergence going to the upside. So that's what I'll be looking out for in the next few trading sessions, and something to look out for in the banking sector in general. So that's all from the Stockwatch today. Thank you very much for joining me. If you have any comments or questions, please feel free to add them to the post and I'll get back to you as soon as possible. Have a great trading day ahead and bye for now.